Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with a gentleman who is quickly becoming a fan favorite. He has his own playlist, Dan Bird. How you doing, Dan? What's going on?
I'm doing great. Never been better.
There you go. Hey,
things are going good.
Yeah. So one of the things I think people love about our conversation is you were teaching me, which means you're teaching the audience a lot of stuff. You're sharing stuff that I've never looked into. You are removing emotion from stock trading for me, which is a huge benefit. And your consistency is remarkable, right? You put out a newsletter every week. We always make that video number one. So let's talk about the newsletter, what's going on, what's in it. And we got a big deal on Friday. Friday's going to be a big day.
Yeah, we do, man. Friday is huge. Huge. This is the newsletter. So I do this every week. Try to do it on Saturdays. Depends on what's going on. Sometimes it's Sunday, but anyway, it basically is a recap of the week, what the market's done, just different things that I look at. Basically my own research, essentially.
Yep.
That I share with originally friends and family, and now your listeners as well. And it's free. There's no charge for this. Just something I do for myself anyway. So I just send it out to whoever is interested. And if people get it and they say, you know, I had one friend of mine that said, I have no idea what you're talking about. It doesn't make sense for me to be on it. Take me off.
Yeah,
I'm like,
sure.
That's fine. No problem. I'll take it off.
Yeah.
But anyway, this is it. breakpointtrading@gmail.com. Just send me an email and I'll add you to the list.
Yeah.
And then you'll get it every week. I usually have some cartoons in there. It's amazing how I can still find cartoons and ones that I haven't used before.
Yeah. Yeah. It's funny. The one on the lower upper left there, I actually want to talk about because we did have a jobs number come out for May. It was better than expected. I think expectation was 320. I guessed 353 and it came in at 390. I actually think that might be the last good economic report, meaning all the next, everything else kind of gets worse from here. I don't know do you have any thoughts on that?
Well, my first thought, and we talked about this last week, and I took the under, and that was more hope than anything else, because if it had been under, it would have actually but it would have kept the Fed doing what they're doing, but they wouldn't become more aggressive.
Correct.
But since it came in so strongly, they actually might have the cover to become more aggressive.
Correct. Which is what I thought would happen. So
I don't think it's going to happen this next one in June, and I don't think it will be July. Depending on what happens Friday.
No, we are playing on this Friday. Is all September. We are playing for September. Is September 0, 25, 50, or 75? I think all four are on the table right now.
With a caveat that depends on what happens on Friday.
Oh no, of course. It's all about
if Friday comes, because the Fed meeting is the week after. If it comes in on Friday at 9.0.
Yeah.
Then the Fed could do 75 points in the next week's meeting.
True.
They could. I mean, they telegraphed 50, but they could do 75. So that's why this, for many reasons, Friday is super important.
Yeah, and I think there's a lot of folks that are looking at the stock market. You're one of my two experts that I talk to every week that are very stock market focused. There seems to be a lot of folks leaning. If you want to bring up your inflation chart, which was part of your survey, there's a lot of people leaning towards inflation being under, right? I think the expectation is 8.2, right? It went 8.5, 8.3. People are hoping for 8.2. Frankly, my opinion, I think for people to have hope that the Fed would pause in September, which again is what we're playing for, it needs to be at 8 or below. It really needs to break lower. I think an 8.2 doesn't do enough. What do you think?
That's right. Yeah, I've got an estimate of 8 on here.
Yep.
And you can see we've got one data point. This is the actual in the red box over here. So one data point that shows it's lower. That was last month's. And you can see it went from 8.5 to 8.3. So didn't go down a lot, but it did go down.
Yeah.
And you can see it's been going up consistently. Now, the way this works is it's a 12-month window. And as another one gets added on, so the 8.3 was added on, and I think it was 4.8 or something dropped off up here. But before that, there were numbers up here of 1.2 and 1.8, below 2, and even numbers around 2. Those are really, really low numbers. So that's what caused this rate of change to look so steep. And this is what has worried everybody, including the Fed. Now, the Fed knows how this works. And when they were talking about inflation being transitory, they know how this works.
Of course.
They know that, yes, it will look bad in the beginning, but it will drop off and start to go down towards the end. So the blue one, these are both using the estimates. So the blue one here is adding 2 months of the estimates in, and this is what it would look like if these estimates come true, 8 and 7.3. So the trend would be looking down, and then this here is a 12-month rolling inflation from December.
Right.
That's what it would look like. So if we do get 8, then the trend will be confirmed. I think the market will take off.
Right.
I think we will have already seen the low for the year.
Okay, that's interesting. So you would say, again, these are all dominoes. The dominoes can fall lots of different ways, but you're saying if we get a CPI at 8 or below, the trend is validated, and you're comfortable saying that the low of the year might be in on the S&P 500.
Right.
Interesting. Okay, that's interesting.
Yep. Now, if we get something that's above 8.5, which would then put this trend back above the high.
Yeah.
Right.
Not good.
Then all bets are off.
Yeah.
And I said that in my newsletter. All bets are off, and we could be headed back to 3,500, 3,700. Yeah,
I agree with that. Yeah, that's why Friday is so. So what do you do next week? Because again, Friday for me is very much a, it's a pivot, right? Up or down, and again, it could also be flat, which I think gives the Fed more confusion, right?
Yeah, right. Everybody more confusion. But you're right, it could be flat. Let's see. First, let me show this one because I showed this chart too. This is real estate, so something near and dear to your heart.
Yes, I saw. I read your newsletter this week. Yep.
Good. This is the Case-Shiller report, and as you can see, this goes all the way back to 2001. So this is the big run up, up to 2006, which is where the high was. And if you had bought a house right there, it would have taken you 12 years to break even. Right? The market went down. Now, if you could time the market with houses, and that's like super hard to do. But if you could, you would sell your house in May 2007, right when this line crossed the 21-day moving average. And then you would just rent and buy a house in May of 2012.
Yep.
And from that point on, it's just gone up. It's never crossed this moving average again.
Wow, crazy.
All right. Not only that, back just before this big downtrend, the distance between the actual, which is the black line, the actual Case-Shiller report, and the 21-day moving average was 9.3%. Right now, it's 12.6%.
Wow.
So that means the trend is parabolic, and parabolic trends are not sustainable.
No, they're not sustainable.
Never. They are never sustainable.
Nope. Agreed.
However, that does not necessarily mean we're going to get something like this again.
No, of course not.
We could just go sideways and let the moving average catch up.
Yeah, and that's what I think is happening because the setup is not 06. It's not adjustable rate mortgages. It's not toxic debt. I think we're going to have 5 years of flat market.
Right. Yeah, I don't disagree with that. I think that's very likely. So, and I mentioned that too, the people that bought houses with really low interest rates,
they're not moving.
They're not going to move.
No.
Why would they double their mortgage rate?
No, I just talked to a guy literally before our interview. He's in a financial situation where he can get approved for a loan even today. He said if he was going to trade up, he was going to go from his current house to a slightly nicer house, one extra bedroom, a slightly better school district. His payment would go from $2,500 to $7,000.
Right.
Who the hell is going to make that payment? Nobody.
They're not going to do that.
No,
they're not going to do that. They're going to stay where they are.
Exactly.
So, I mean, even during this period right here, I bought the house that I owned. I had a lake house in Maryland. I bought it in 2001. I actually put the contract on it the day before 9/11.
Oh, wow.
The day before.
Wow.
And everything stopped, if you remember.
I do remember.
And my realtor said, you want to back out? I said, no, I'm staying in it. This is the best time.
Yeah.
So the market went up and my house went up. It kept going up and up and up. It was fantastic, but I didn't want to sell for the same reasons. And also because I liked where I was living. It was a nice house. I enjoyed it. I had no reason to sell.
That's the thing about real estate that I think a lot of people try to relate real estate to stocks or crypto or NFTs or some other thing. You live in a house. It's the third thing on Maslow's hierarchy of needs, right? Water, food, shelter.
Right.
It's not a tradable asset. Like if you sell your home because you're trying the market, where are you going to go? You've got to rent and there's nothing to rent today, or you got to buy something else. I mean, you're going to trade up your mortgage. That's why people that want to take their stock investing and make it like real estate like stocks. It's like, it's not the same, man. There's utility.
It's not the same. And even doing a chart like this, I mean, charts are really helpful with stock trading. But a stock like this for real estate, for the Case-Shiller report, is just interesting.
It's interesting. Yeah.
Right.
And it's interesting.
It doesn't necessarily mean anything, because
I agree.
I mean, you probably even hope that it's just going to go sideways up here.
I do.
Because parabolic moves are not sustainable.
Agreed.
So sideways is probably the best thing. Even a little bit down is probably the best thing. Now the 30-year mortgage down here, you can see how it's ramping up, and this is a monthly chart, so this is probably a little behind.
It's behind
where the actual mortgage rates are. It's showing about 4, and I think the rates are a little above that right now. That's nationwide, the nationwide average. But you can see rates are going up, but also wages are going up. So all of these things combined does not necessarily mean that we're in for a real estate crash like we had back here.
Yeah. The biggest thing I talk about in my book, and it's something I watch for my market, is the Affordability Index, which is a combination of price, interest rate, and wages. It's those three variables working in harmony that can say you have a problem or not.
That's right. And I agree with you. I would expect to see this Case-Shiller report start to level off, even decline a little bit, which is okay.
Yeah.
But I don't see it taking a big dive like this.
No, we don't have the setup for forced sales. That's what we had last time, was forced sales beget more forced sales beget more forced sales.
Right.
Totally different. Now, if unemployment spikes to 12 or 15%, all bets are off. But, we're at 3.6 today. So it's got a long way to go.
Yes. I was just curious about, this is the Ipo Etf. I was just curious what that looked like. And you can see back here in 2020, IPOs were just, every day you hear about a new IPO.
Yeah.
Right.
So would this include SPACs? Would they be in this?
I don't know. I'd have to go look at what is actually in this ETF.
Yeah.
I don't know if SPACs are in it or not.
Yeah. The reason I want to talk about SPACs is, again, the All In podcast said cocaine and Red Bull. SPACs, there were 25 SPACs in the last 2 weeks that issued going concern letters. Basically, they're not making any money and they're burning money and they're just going to go to bankrupt. They're going to go to zero.
Yeah.
The last 2 years have been very bad capital allocators, and a recession is going to wash all of that away. There's capital that's going to zero.
Yeah, I agree, especially with SPACs. I mean, SPACs are dicey.
Yeah.
I mean, there's a good reason why that vehicle is there. It does help some companies get to market quicker. And if they do it right, they can end up being a strong company in the end. But there's just as much likelihood that they're going to collapse as well.
Well, it's just the same thing in real estate. Anytime something gets positioned as the easy button, a lot of idiots jump in. It gets overdone. You get a meme stock going to 1,000 that goes back to 1.
Right.
That's what happened. SPAC became the easiest, quickest answer to make $1 million. Lots of people did it. Now you have 25 going concerns and probably more coming. It's going to end badly for bad capital allocators. That's what recessions do.
Yep, I agree. And you can see the IPO trend now ever since the end of last year.
Yeah.
This is November. It's just been down since then.
Yeah.
So this is interesting. Again, if you want to play the IPO market, this is a way to do it with this ETF. It's called IPO. You can buy and sell it just like a stock.
Didn't even know.
So if you think the IPO market is going to take off like it did back here in 2020, or if you want to short it, you can short it too.
There you go.
But this is an ETF. You can play just like a stock.
Okay.
This is my favorite head and shoulders chart for the S&P. This is the one that I use to suggest that we were going to 38.50
Yep, I remember.
when we were way back here, when this left shoulder and then a head and then the right shoulder formed.
Yep.
And technically, the distance between that and the neckline, you can see the neckline here is right about 4,300.
Mhm.
The distance between the head and the neckline, the target should be the same distance down, which ended up at 38.50, which just happened to be exactly 20% off the high, which is the definition of a bear market.
Okay.
So all of those things sort of combined to give me that number.
Yep.
And just so happened, I went down there, hit it twice, went below it actually. I hit it once, went below it, almost hit it again. In all three cases, that same day, all three of those bounced back to 3,900.
Yeah, never close below.
Never closed below 38.50.
Mhm.
So what that illustrates is that's a good example of the algorithms, the
Oh,
robots,
for sure. The
robots trading. They do the same exercise that I did right here. This is just technical analysis. I mean, every good technician out there understands how to do this,
Mhm.
right? So 38.50 was on everybody's radar.
Absolutely.
So as soon as it hit it, just bounced back up. Now, we bounced now right up into here. So you see all that congestion right there?
Mhm.
I put this in my newsletter, and I put a copy of it here in the slide deck.
Yep.
So what I did was I took the same chart, and this is called a flag pattern. So you can see there's a flagpole right here.
Oh, I see it. Yep.
So that's the run up. That's called a flagpole.
Mhm.
And then the market consolidates, just moves sideways.
Got it.
That's the flag.
Mhm.
And the way this works is the distance from the bottom of the flagpole to the middle of the flag should be the same distance up to the target.
Oh, interesting. Okay.
All right. So again, this is just technical analysis. This is just one of the functions. Doesn't mean it's going to do it, by the way.
No.
Doesn't mean it will do it. But if it breaks out of this top right here, which is about 4180 roughly,
Okay.
4175, 4180. If
Okay.
it does break out of this and it does it on volume, then it is most likely going to go to the
It's
target.
gonna, yeah.
Right.
Okay.
Again, all the algorithms will kick in. Everybody's looking at this. All the technicians understand how this works.
Mhm.
So they're all looking at the same thing.
Mhm.
So we went from 3,900 to 4,125. That's the middle. And then the target is 4,300 to 4,350. 4,300 just happens to be the same support resistance line that we've been using for quite a while.
Yep.
It's the neckline of the head and shoulders. This is a very important pivot point right there.
Mhm.
Okay, now, could it get there in the next week? Could it get there by Thursday before the CPI report?
Mm.
Sure, it could.
Okay.
That's 225 points it would have to go. But it went 285 in 4 days to form this pole of the flag.
Yeah. Okay.
So it could easily get to that level or around 4,300, let's say,
Okay.
by Thursday. And then the CPI report comes out.
Okay.
Or it could just go sideways, by the way.
Oh yeah.
The whole market might be just waiting the whole week for the CPI report.
Yeah.
And this whole thing just bounces around in here for the whole week.
Mhm.
All right. And then it could break out and go this way.
Good.
Or it could break down and go this way.
Mhm.
That Friday report is going to be super important. Even if this does break out and goes up here, still going to be super important. If we get a reading above 8.5, then it's gonna reverse and it'll go right back down to 38.50, and it might get down to the circle that I drew down here, because markets a lot of times will overshoot the target. So we could get back down into the 3,700 area.
Yeah,
Or
I just want to play that out.
Sure.
So, because there's really 3 examples. I think 2 are clear in my mind. I don't know the third, so I want to ask you. So again, CPI comes out. It's 8.5 or above. The Fed has a green light to be more aggressive than the market expects. We go down to 38.50, probably below, because the momentum will take us there. I get
Right.
that makes sense. You get validation. We come in at 8, 7, 9, something below. The market goes great. The Fed has covered a pause. September pause is on the table, which is what I think the market's expecting. So it probably goes up, right?
Right.
I get that. That makes sense. What happens if it's 8.3 again? What does that do? I don't.
8.3. So even from last month.
Even, yeah, not up, not down.
I think the market will still look at that positively.
Really? Okay.
Yeah, I think a flat number this month,
Okay.
the market will still look at it positively. Remember, the market is looking ahead.
Always ahead.
It's always looking 6 to 9 months ahead.
Correct.
So I think it wants to go back up.
Okay.
There are a number of signs that show that the market wants to rally.
Okay.
Including, I didn't include this, but we can go back and look at it, the relative chart of the S&P versus NASDAQ.
Okay. Yep.
And the NASDAQ's and also discretionary versus staples and growth versus value.
Yep.
All of those are starting to turn up.
Hmm.
So there are signs that the market is strengthening and it actually wants to go higher.
Yeah, as we talked about.
That doesn't mean it will. That doesn't mean it will.
Oh no, not at all. Not at all. Yeah.
So Friday is super important. So if we get a flat, then we might stay in this channel, or we might stay wherever we end up. If we go to 4,300, we might stay around there. If we get something above 8.3, shows the trend going back up, I think we go back down 38.50 or below.
Yeah.
If we get something below 8 or below 8.3, let's call it, especially if it's 8 or less,
Yeah.
the market's going to take off.
Yeah, if it's 8 or less, I think the market's like, yeehaw, the party's on. The Fed's going to pause. They won't be our enemy. Because there's a lot of money to be made betting ahead of the Fed pivoting.
Oh, yeah. The market does that all the time.
All the time. Yeah.
Yeah.
All
Not
right.
always right.
So
they're not always right. They do it all the time.
They do it all. Yeah. So I guess the big question I have for you, you're a trader. You'll probably be in and out a couple of times next week. I am not a trader. I'm an investor. So I'm guessing your advice is, there's no reason to be early. Wait for Friday.
Yes, absolutely.
Yeah. I think
absolutely wait for Friday.
That's it.
Unless you are a trader and you're very nimble. And if you are, and let's say the market starts to take off Monday and starts to approach that 4175 level.
Yeah, the top of the flag. Yep.
Yeah, top of the flag, and looks like it's going to break out. If it does, it's probably going to keep going.
Yeah.
But let's say that happens on Monday.
Yeah.
Then yeah, I will probably be long the S&P, SPX. I'll probably do credit spreads.
Okay.
And be long the S&P.
Yeah.
But I will be ready to get out on Thursday.
Yeah, you'll be flat.
I will be flat the market before that CPI report.
Yeah. Everybody, yeah, be flat Thursday or end of Thursday. Yeah.
Right.
Okay. Yeah, I think for me, again, not a trader. I'm an investor. I want to buy a couple of cheap assets and hold for years. I will be doing nothing next week except waiting for Friday.
Yeah. This one here is the VIX. So this is just a 2-month chart, but it's a 60 minute. So every one of these bars represents 60 minutes. So you can see every time the market goes down, the VIX goes up. The market goes up. That's in these green boxes. The VIX goes down, except for this time when we hit a new low right here. The market went down, but the VIX went up, which was interesting. Okay. Well, then the market went up and the VIX went down. That's what it's supposed to do. Okay. Then the market came down and made a new low, but the VIX never made a new high. This is one of the reasons I say the market wants to go higher. Yeah. All right. And then the market continued up and the VIX went down the way it should.
Well, let me ask you about that. Could one of the, and again, these are all just wild ass speculations. One of the things I'm reading more and more about is money managers increasing their cash positions. So could this be one of the reasons they're just selling and staying in cash, and maybe they're waiting for Friday too?
I think that's absolutely true. I think everybody's waiting for Friday. The fact that they are selling, just the fact that they are selling alone doesn't necessarily force the VIX to go back up and hit a new high the way it should have.
No, exactly. That's kind of my point.
The market hit a new low, but the VIX did not hit a new high.
It was in order.
The reason the VIX hits new highs when the market goes down is because of panic.
Yes.
And usually retail traders.
It's
either panic, or it's early in the cycle where all the big institutions are just beginning to distribute, beginning to get out.
Okay.
And then it starts going down faster than they expected. So they start selling, and then the retail traders start selling, and then everybody's selling in a panic mode. That's what makes the VIX go up. That did not happen here.
No, exactly.
So that says to me that number one, the big institutions have already done their selling. All right, they're already in position for a market rally. Okay, and that's why they're in cash.
Got it.
Doesn't necessarily mean they're going to cash last week. They've been in cash for a while.
Yeah.
All right, but they've already done. They've all through this whole period right here. They've been doing their selling.
Okay.
All right. Now, when the market goes up, the VIX goes down. That's the way it should happen.
Got it.
The time to start to be careful is when this VIX gets way down here below 20, like it did right here.
Okay.
You can see the VIX was below 20 and the market was way up here. Right?
Yep.
So that's the time to be careful. You have to be counterintuitive when you're a trader. So this is the time to start getting ready to get out.
Gotcha.
But it's not there yet.
Nope.
So again, this is one of the reasons I say the market wants to go higher.
Yeah.
And that report on Friday is going to be super important.
Very, very cool.
And then this is the Keltner Channels, which is the ATR. Or reversion to the mean. Think of this as the reversion to the mean. So this blue line in the middle is the mean.
Yeah.
Whenever this gets extended into this third gray area, that's overextended. So it's going to try to get back to the mean.
Yeah.
It did it right here, twice. It went into this gray area, went back up just below 21 day. Right here, did it again, went back up above it. And now we're hanging out right at the mean. Again, the market's waiting for that CPI report.
Yeah.
So if we go to 4,300, we'll be back up into this third gray area again. If we do that this week, so the market will be ready, be set up for a big drop, or it could keep up going higher. But right now, it's just hanging out in the middle.
Yeah. Well,
waiting to see what's going to happen.
I think the market is like a lot of us, including myself. We're just going to sit tight, sit in our hands. We're not traders. We're investors. We are going to wait for Friday. Can you show your newsletter email one more time?
Sure.
Folks, if you want to get something that I read every weekend, all you have to do is send him a note at breakpointtrading@gmail.com. Dan, thank you very much for video one. I look forward to the conversation number 2. Thanks.
Yeah, and I want to talk in number 2. I want to talk about recession.
Awesome. We will do that. Thanks.
All right.